The cryptocurrency market is consolidating once again, just like it did in late 2024 and again in late 2023. This is part of the natural cycle. Historically, September has always been one of the worst performing months for crypto. But here's what that really means. Bitcoin has entered the buy zone. I'm personally a buyer here. Even if it dips a little lower for a week or two, I'm still buying. My expectation is that by the end of the year, Bitcoin will be trading at a minimum of $150,000. I'm buying Bitcoin, I'm buying Ethereum, I'm bullish on XRP, and I'm adding Solana, Avalanche, and a whole range of other quality altcoins. And I'd like to know from you, what cryptocurrencies are you buying right now? It's no surprise why the Trump family has been buying Ethereum and other strong cryptos so aggressively. They knew what was coming down the pipeline. For example, SEC Chair Paul Atkins, who Donald Trump appointed, recently explained his push to make crypto super apps a reality in the US.
Key priority of my chairmanship is to allow market participants to innovate with super apps. I'm often asked, what do you mean by a super app? Plain and simple, securities intermediaries should be able to offer a broad range of products and services under one roof with a single license. A broker-dealer with an alternative trading system should be able to offer trading in non-security crypto assets alongside crypto asset securities, traditional securities, and other services without requiring 50-plus state licenses or multiple federal licenses. I've directed the Commission staff to develop further guidance and rule proposals ultimately to make this super app vision a reality.
This is massive, and adoption data backs it up. 70 publicly traded companies now collectively hold 4 million ETH. Wall Street is especially watching Ethereum closely. Tom Lee's company currently holds the largest public Ethereum treasury in the world. On top of that, Ethereum just made history by becoming the fastest asset ever to hit a $500 billion market cap, beating every other major asset and company, including Bitcoin. Here's the timeline to reach $500 billion. ExxonMobil, 8 years. PetroChina, 8 years. Bitcoin, 12 years. Facebook, 13.5 years. Ethereum, 5.8 years. No asset in history has ever reached $500 billion this fast. This is a major turning point in global markets. Yes, Ethereum is currently in a pullback. But think back to the 2021 bull run. ETH hovered around its previous all-time high for weeks before breaking into true price discovery mode. This cycle looks similar. ETH briefly hit a new all-time high, then pulled back. Could it now consolidate and repeat the breakout pattern? History suggests it might. Meanwhile, Ethereum supply on exchanges is at multi-year lows, with just 18.3 M ETH left on exchanges. That's an early indicator of a supply squeeze paired with increasing demand. Legendary billionaire investor Tim Draper remains extremely bullish. He has long predicted a $250,000 Bitcoin. Yes, he admits he was early, but he still believes strongly in that target. Draper explains that Bitcoin is a hedge against bad governance, reckless government spending, and inflation. Now let's zoom out. Bitcoin has surged from the bear market lows of $15,000 to $124,000, largely without significant retail participation yet. That's incredibly bullish. Retail hasn't arrived, but institutions have. Looking ahead, Bitwise predicts Bitcoin could hit $1.3 million in 10 years, with an annual growth rate of 28.3%. That's nearly 30% returns per year for a decade. And the institutions are already piling in. Every category of institutional investor increased their Bitcoin ETF holdings in Q2: banks, governments, private equity, endowments, trusts, and insurance companies. One vague example: BlackRock's ETF is buying more Bitcoin daily than miners produce. Miners issue 900 BTC per day, but BlackRock buys around 1,200 BTC daily. That math speaks for itself. Looking to Q4, we have even more bullish catalysts. The Clarity Act market structure bill is expected to pass in September or October. Representative Brian Steil, chair of the Digital Assets Subcommittee, says, This will be a watershed moment for crypto in America.
The U.S. regulatory framework currently doesn't meet the moment. It's often based on rules that were drafted almost 100 years ago. And what it's allowed is regulators, in particular Gary Gensler under the Biden administration, to create rules of the road and enforcement actions to punish companies who are innovating and developing in this space. It led to two things. It led to a lack of consumer protection as many of these companies moved themselves offshore, but it also prevented innovation and development from occurring in the United States. I believe the Clarity Act solves that problem. It puts a clear regulatory framework in place that will allow our regulators to make sure that there are consumer protections, to make sure that any abusers inside the system are addressed, but also will really encourage innovation and development here in the United States of America rather than offshore.
So here's my position. I'm buying Ethereum, Solana, Bitcoin, Avalanche, Borg token, Cody, Supra, and several other strong altcoins. The setup is pointing toward a violent, explosive Q4 rally.